Gentlemen, I finally did it. I achieved two of my major investing goals we're going to be talking about in this video coming into the end of this year. We're going to be talking about this while taking a look at my six-figure stock portfolio. It's becoming much more of a growth portfolio than a dividend portfolio these days. We're going to be talking about the performance of that portfolio. I actually have the charting with growth, including dividends. And then finally here, I really want to talk about this Metaverse ETF. A lot of you have been asking me about it. I've been heavily talking about the Metaverse lately. So if that's something that interests you, consider hitting that like button, folks, because let's just dive right down into this by taking a look at the broader portfolio this week, including the goals that I was able to achieve. Now, these goals kind of came by accidentally because many of you heard that I wanted Facebook to be my largest trading position, my largest convicted stock in this portfolio. And finally, because Tesla's pulled back, because a lot of the tech companies have pulled back, guys, we can now see Facebook makes up a $25,000 position, actually outweighting by dollar value than any other position in this portfolio. So I'm going to applaud myself. Here's Facebook, guys. The charting isn't exact because it doesn't show the decimal points of percentages, but yep, Facebook is now the largest position, which I'm very happy with, by the way. But speaking broadly about the portfolio real briefly, guys, I am not complaining here. I'm actually shocked, even though the markets continue to sell off, because of my global diversification, it has really cushioned the blow to the US tech sell-off. And even though, you know, these US large caps make up half of my portfolio, minus say Pepsi and Johnson & Johnson, which are kind of more consumer staple and healthcare focused companies that are a little bit more, you know, disconnected from the tech sector. Still, these things have been selling off pretty aggressive, and I'm still holding roughly all-time highs at 361,000 total. As of coming into Friday today, there's been a further sell-off, so maybe we're a little bit below this today. But aside from Facebook, my only other goal was to finish off my Bitcoin position, and I really wanted to own somewhere between 15 to 20% of a Bitcoin. And here we are this week, folks, officially at 0.151 Satoshi Nakamoto's, doing very well from the Bitcoin perspective, which also selling off today. But I'm not going to be buying any more of that. I told you guys kind of coming into the end of this year, the rest of this year and into next year, I want to continue to finish up my smaller positions, which are going to be Royal Bank, which are going to be these dividend-focused stocks. I mean, what else do we got in here? Granite Real Estate, I need to build those up. They're very tiny incremental positions. And I also want to continue to reestablish my cash position. I'm always going to leave some cash on the table in case something super drastic happens. Same with having, you know, margin and leverage. But I need to rebuild that up after, you know, just flooding my money into the Bitcoin and into the Facebook stock. But I feel like, you know, coming through the next 3 to 5 years, I'm probably going to pat myself on the back for that one. So before we talk about the performance of this portfolio in and of itself, folks, let's just talk about the Metaverse ETF, you know, making Facebook the largest position in my portfolio, primarily focused on people not fully appreciating what the Oculus, the metaverse they're creating, is going to be valued in. I don't even think it's been closely valued into the stock price yet. But let's talk about this Metaverse ETF. I'm not going to be buying it. It's called the Thematic Investing Global Opportunities. And if we scroll down, guys, this is the Metaverse stock trading on the ticker symbol MTVR. And so many of you asked me about it, and I think it's kind of stupid. I honestly think it's ridiculous because it kind of just looks like my portfolio minus a few exceptions here. I mean, take a look at the top weighting. You got Apple, it's got Facebook, it's got Google, it's got whatever Pearl Abyss Corp is, not really sure. It's got Disney in there, and I'm really curious how Disney plays within the metaverse. That's something that I've never really thought of. But you got Microsoft, Oracle, Tencent Holdings, companies that personally, and Netflix. How does Netflix play into this metaverse thing? These aren't the kind of metaverse stocks I would have initially thought of. But when I say think of, I mean Microsoft, Google, like absolutely. But Netflix and Disney, maybe not so much, right? I wouldn't waste my time owning this. This is kind of like owning a bank ETF to me, a Canadian bank ETF, because there's so few bank stocks. Why do you need to own the ETF? You can just own the banks yourself. There's like 5 of them. It's not going to make that big of a deal. Just like there's not that many metaverse stocks, and for some reason, I do not see NVIDIA at the top of this list. I would rather own Facebook and NVIDIA as my top tiered, well, that and Microsoft, because gaming, NVIDIA, you know, all of that stuff is already part of the metaverse, and it's such a big portion of it right now who cares about the rest of these companies? Why am I going to pay some manager a huge amount of money to own basically what is the top holdings in the S&P 500, right? Doesn't make any sense. So putting my views on the Meta stock or ETF aside, guys, let's just talk about the performance of my portfolio. So I'm going to minimize my face here, and hopefully I can make it super tiny so you guys can see these charts. But I haven't updated you on this in a little while, and this is coming into the November performance. Unfortunately, I'm just going to hide this because it shows my account numbers, so we're not going to see the exact percentages. I will do that toward the end of the December updates, because like I said, this is only for November. And when we take a look, the dotted lines represent the broader indexes. So the Toronto Stock Exchange, like the TSX S&P 500, is the dotted bright kind of teal line here. And then the green line that's dotted is the S&P 500. And then these are my major accounts, minusing my corporate accounts, which, by the way, my corporate accounts are just doing very fabulous considering they were incepted in May. I think I'll throw the numbers up real quick just so you guys can see exactly how that is performing overall. But these accounts have been around for a while. I mean, my main account has been around since September of 2014, when I keep telling you guys there was a point in time where my portfolio was down almost 50%. But lately, we have been seeing some underperformance from some of these accounts against the S&P 500, because the S&P 500 is still pushing toward some pretty good highs, yet my main managed account is pulling back. My RRSP has been slightly pulling back, and the only thing keeping at par is my TFSA. And my TFSA, probably largely because Apple, Microsoft, and the S&P 500 index make up 30% of that portfolio in that account. So it's no surprise that it tracks the S&P so closely. But putting that account aside, guys, I can see why my RSP being huge in Johnson & Johnson and Pepsi, which, by the way, have been exploding this month. So it'll be more neat to see the December performance. But you guys can see that like some of these accounts are up like 300 to 400% over like the S&P same time period. It's not even up, barely 100%. So there's no complaining. I told you guys, I'm averaging 30 to 40% returns if you combine all these accounts together, which is kind of mind-blowing to me. And it's just, super intriguing. These are just super intriguing numbers to look at, because it is the accumulation of growth and dividends, not including capital contributions. So zero BS. In fact, I can show you what with capital contributions look like, because I document that on my chart here. And I'll just throw my chart up so you guys can take a quick look, because I mean, going back to 2017 on this chart, I only had $50,000. Today, to be at $360,000, guys, in a short, not even 5-year window is absolutely staggering, right? So just to give you a quick insight on that, let's take a look at the broader markets just briefly to see how my pain is going to feel going into the weekend, because it looks like Bitcoin is selling off again here, folks. Tesla was in the green this morning, but it looks like we've lost that, and we're going to be hitting some new lows perhaps here soon. We haven't seen in a while. Ooh, yeah. Well, look, so there's some green. Yeah, always the Canadian companies, Northland Power, Algonquin. So my utility's doing pretty good. Other than that, it looks like a lot of pain in the broader markets today, folks. But anyways, I'm going to pass the question off to you. Have you guys hit your financial milestones, your investing milestones coming into the end of this year? The only thing I missed out on was dividends, because I really wanted about $10,000 in annual dividends. But as I told you, I do not want dividends to be the primary factor behind my investing. I want it to be the companies over dividends. If they pay dividends, great. If they don't pay dividends, I don't want to shun it, because if I think it's going to have huge potential in the future, I want exposure to it. But let me know how it's been working out for you in that comment section below. But stay cool, stay awesome, and I look forward to catching you tomorrow.